It's time for the Your Personal Bank Show with Ferenc Toth, President and founder of Secure Estate Management. Take charge of your financial future with your personal bank. Now, here's Ferenc Toth.
Welcome to Your Personal Bank Show. And again, we've been doing what we call a People of Excellence. I bring in some special guests on occasion, and I've got a really exciting one today. Greg is laughing. Now, Greg Williams, he's... Well, Greg, tell us a little bit about yourself.
Well, thanks, Ferenc, for having me on. This is pretty exciting. I'm not much of a radio person. But my background is engineering and aviation. I'm in the Seattle area. My background was from... my dad was in the military, so we moved all over the place and landed in the Seattle area, enjoying the heck out of that area. Been there for about 15 years now. And I do work in the energy field and the financial field. We do a lot of real estate. My wife and I are into the single-family homes, and so real estate has been a very good part of bringing us together, and that's how we met.
Yeah, actually, I met your wife, Trish, originally.
Yes.
And she, in fact, I remember I had shared the idea of the personal bank concept with her. It's probably 7 or 8 years ago now.
I think so.
And it was through a mutual client, and I remember she tried to get you. We did a go-to meeting because they're up in Seattle. I'm in Phoenix, and at the initial meeting, you refused to join because you didn't want to listen, right?
Well, you always think you're too busy for things like that are important.
Exactly. And then I remember Trish. Basically, I didn't hear anything back from her because she thought, well, this is too good to be true.
Yep, we thought it was.
And then I know a mentor of hers in the real estate world learned about this concept, shared it with her. And next thing I know, I'm getting a call from Trish saying, hey, I just heard from somebody I respect, just share the same idea you shared with me a couple of years ago.
It's amazing the way that works out.
It really is. So then we set up another meeting with both of you. And that's where I shared the concept with you guys. When you first took a look at this yourself, and I know you got that engineering analytical background, right?
Yeah.
What did you think at first?
Well, the first contact came from our nephew, and he's kind of a guy that real smart, like a lot of kids are these days. But I was just kind of looking at him sideways, like, really? And it seems like, oh well, this is too good to be true.
Right?
You got to be kidding. They got some sort of law; it's going to be illegal next year or something like that.
Okay.
And I just listened more, read some information. Listened to Ferenc verbally and looked at the emails and stuff, and there's a couple of books on the topic. Finally, I realized, people wouldn't be writing this much about it, wouldn't be talking about this much if it was just a flash in the pan.
The book I know, one of the books at least, Financial Independence for the 21st Century.
That's it.
Dwayne Burnell.
Yeah.
I recommend that to everybody.
Yeah, that's a good one. And, there's a number of other articles and pieces on that. And, the different stuff that's out there to look at.
Sure. And if you want more information on that, contact us at yourpersonalbank.com. We'd be happy to send you the articles and information that, Greg's referring to that I sent to you back then.
Yeah, you did. I read them. It makes sense.
So you read them. You read the information, read the book, did a little bit of due diligence.
Yeah, we had a meeting. I fill out the financial form that's just a one-page snapshot of things. It allows you to, figure out where we are.
Right.
And I proposed a couple of different options, and I fine-tuned it and decided that, okay. And then the big question for me, I'm an active private pilot, and there was some questions about that, and I had to make some decisions on eligibility and all that. So that was a thing I took care of, and it's done now. And the personal bank that we signed up for, and then Trish has one as well.
Sure. And by the way, as you're referring to, pilots, those of you that don't know, a little bit, with the personal bank, there's the cash component, there's the death benefit, a little bit more challenging for a private pilot to get qualified for life insurance, right?
Right. That's true.
So, but we got it done.
Yeah. They just had another form I had to fill out with my hours and ratings and qualifications and currency and all that.
So what, again, you did the due diligence. You read the articles, the book. You started looking. We asked some questions, all that good stuff. What got you thinking that this might make sense for you?
Well, I really enjoyed the tie-in to the real estate. We do portions of real estate deals as well. Kind of act like a hard money lender sometimes. Say somebody's doing a project, a rehab or something, and they need $20,000 to have the house re-sided and re-roofed or something. Well, we can come in and help them very, very quickly. That way they're not, having the house get rained on or something, and get that problem solved. Well, being able to pull from my personal bank, that can be done very, very quickly. And I make a separate deal with the contractor and just take care of it. Then the funds come back, presumably with interest, and I put funds back into the personal bank, and it continues to grow.
And what's nice is when you access those funds, it's not like you're having to fill out applications or qualify or...
No, it's very, very quick. In fact, the last home I did was my old Chevy pickup, which I had this truck for years and years and 320,000 miles. It finally decided to give up on me.
I remember riding in that truck, by the way.
Yep. So, personal bank, been looking around for another pickup, wanted to find one that's exactly right, and I found it. And, of course, everybody else wanted that same pickup. Well, my financing went through right then and there. I now drive a new Toyota pickup. New, 5 years old.
Cash right away usually talks, doesn't it?
Oh, yes. And that's the beauty of being able to have this my own personal bank.
Right. So I always talk about one of the keys to financial success is having ready access to capital. Mm-hmm. And, for those opportunities that present themselves, like the investments with the real estate you're talking about, or you want to purchase something like that truck you wanted to get, and you had competition, and you were able to, produce some money a lot quicker than other folks.
Yep. It really helps in our case.
Absolutely. That's awesome. So, of course, you mentioned your wife, Trish. She, had asked me to come speak to her real estate group. I remember there up in Seattle. It took her about 6 months to convince me to do so, because I'm in Phoenix. Why do I want to go up into Seattle in the winter? So that was kind of a fun process. Finally did, and I got a standing ovation. I don't know if you remember that.
Yep.
There was about 70 people in the room, I think it was. And, I'm a financial guy, talking about financial stuff, taxes, boring things. I'm not used to that. So that opened my eyes quite a bit because I wasn't familiar with the whole real estate investment world and the educational world that's out there that I know you and Trish are a big part of. Mm-hmm. So I know she's ran a group for quite a number of years. You were involved with that. What is it that they were doing, or you guys were doing with all that?
Just involved with the financial people that are doing real estate investing. It's an exciting field. We're just really into it.
Yeah, and I know, you guys been doing, 20, 30 years?
Oh, at least, yeah.
So a lot of it's just educating and sharing and being mentors still,
mm-hmm.
right?
Yeah, we really enjoy helping people. Trish does a lot of coaching and mentoring, and I do a lot of hands-on work as these rentals.
Yeah, and I know you guys make quite a team, too.
We have fun. There
you go. And again, Greg and Trish are a couple that, personality-wise, probably couldn't be more opposite. Greg, he's an analytical, steady guy, right?
Yep.
And Trish is the high energy, out there in front of everybody person.
Yeah. Works good.
That's awesome. So we're in the next segment. I'm gonna have Greg join us, and we're going to have him share a little bit about how he's used he's shared a little, but how he's used his personal bank with him and his family, and how he sees it going in the future. If you want more information, again, contact us at yourpersonalbank.com.
For more information on Your Personal Bank, call Ference at 866-515-6280 or online at yourpersonalbank.com. Back back to Your Personal Bank Show with President and Founder of Secure Estate Management, Ferenc Toth.
Welcome back to the Your Personal Bank Show. I've got a special guest with me, Greg Williams. He's part of the People of Excellence that interviews I've been doing with folks, bringing them aboard. If you go to yourpersonalbank.com, you can listen to any of the previously recorded shows. I've had some pretty exciting guests on previously. John Burley, we've had Vimmel, we've had Ron Compton, one of the top estate planning attorneys in the state. The thing is, what I've done is been trying to do for folks and the listeners is, the personal bank concept. I talk about it all the time. It's a way to, have access to capital, without the weights and, qualifying. You got tax favored. Your money grows. You can get positive arbitrage, all those kind of good things. But I like bringing some folks on who've got experience and varying backgrounds, what I consider rock stars. And I've got Greg here, and I've gotten to know him and his wife really well. And they're rock stars in their field. You've been in doing real estate investing and educating for, 30 years?
At least that much.
Yeah, and welcome to the show again, Greg.
Thank you.
So I know they work with a group of folks up in Seattle. And, you've been working with them, educating them on real estate investing and various other things, right?
Yeah, we've been involved in a couple of different groups, and a lot of people that are learning to do home flipping or home purchasing. A little bit of work with multifamily, a lot of work with our own family. I have my nephews and my sons, and they are all involved in various parts of home ownership and home real estate and thinking about investing. And it's really good to be able to pass on information that we've been able to generate over the years.
Right. And it's pretty exciting, like I said, gotten to know you guys and sharing some financial literacy ideas and things that hadn't really heard elsewhere or before, right?
Yeah. This whole personal bank thing is something where you just don't see that. People don't think in those sort of words.
Right, and I use the term "think like a banker" versus an investor. I share that all the time. Mm-hmm. And as many of you know, I'm chairman of the board of a bank in formation, so I know a little bit about banking. But I know initially, Greg, when we first talked to you and Trish about the idea, particularly the first, it took a couple of years. Mm-hmm. There was some skepticism, particularly on your part. Mm-hmm. What did you do to kind of get past that?
Well, it helped me by learning and reading and talking with other people. And I spoke to some other agents and talking about how insurance ties in. I always thought of insurance as a cost. But sure. in reality, it can be, rather than paying a premium, you can be contributing to your own, future benefits, your own personal bank, so to speak. So it just made a big difference in the whole mindset of how to look at this.
Yeah, and you've got, you've got the cash values, you can grow those, access them, all that good stuff, tax favored, all that fun stuff. You're the engineering type, analytical type. I talk to a number of those kind of folks. Greg, if somebody like with that kind of background was considering looking at this, what would you recommend to that person?
Well, I always like to say, look at what I've done. Look what our situation is. And I'll throw out examples of how our personal bank is working and what we did and what the annual contribution I do for X values or something like that if I talk to somebody. What is it? Give us an example of how you've used your personal bank, for example. Well, like I mentioned in the last segment, my old Chevy pickup croaked, and only had 320,000 miles on it, and so I needed a pickup, and I had been looking for just the right pickup because I keep vehicles for a long period of time, obviously. So I was able to access funds out of my personal bank, and I knew about how much I could pull, and I knew how much that advance wanted to be and what it was going to cost and all that stuff. So I had ammunition when I was in my search process, and so I went in and finally found the one I wanted, and it was just a matter of, I don't know. There's 3 people looking at that same vehicle, and I had the money on the table first. So, and that's what usually wins, right? On those when there's competition for a deal. Yeah. When you're looking for a real low mileage Toyota pickup, 4-wheel drive, it just, there's not that many of them out there on the used market.
Okay.
So it was something that, and real estate's the same thing, exact thing.
So when you got a good opportunity, the person with the money first usually wins?
Exactly, especially up in the Seattle area. Real estate is just nuts there.
Certainly. So, how do you see the personal bank for like you and your family long term? What do you see it doing for you?
Well, I like the aspect of being able to pass on assets to my heirs in a tax advantage way. I like the idea of my heirs, my kids and nephews and grandson and all that stuff, being able to have the advantages of that. And a lot of that is just knowledge and education. Kids are not taught these financial concepts.
Greg, I find most people, not just kids, are not really taught financial literacy.
Well, I want to have my kids a little bit different.
Certainly. And so a little bit of financial literacy kind of comes along with this, doesn't it?
Oh, yeah.
Many times I've shared, think like a banker versus an investor. There's a difference, isn't there?
Mm-hmm. Totally.
Yeah. Investors often, as I've mentioned many times before, often take on more risk than they realize. Mm-hmm. Things go wrong, they lose, they got to start over, make up lost ground.
Yeah.
All that fun stuff.
The example of my Toyota pickup, I basically what's happening is I'm not making payments to a bank, I'm making payments to my own personal bank. So I'm refilling that cash bucket that I took in advance against to purchase the pickup, and I'm making my own interest. Whatever I make payments on, that's funds that are going back in there. If I want to defer a payment, say I don't want to pay this month or this quarter because we're going to go to Mexico or something like that, I have that choice. I don't have to ask anyone. I have the control. I really, really like those features of the personal bank. I'm in control.
And I talk about that. Take control of your money, right?
Totally.
And that's awesome because, like you were saying, you're still earning interest on that money while you had it out purchasing the truck, right? Mm-hmm. And you're not paying interest to a lender to borrow to purchase it.
Correct.
So if you add the two together,
it's a win-win.
Yeah, comes out with a nice return if you think about it.
Yeah.
Your money, or more money in your pocket, we'll put it that way. Mm-hmm. So, and then you kind of, I liked what you mentioned too about some of the longer-term stuff, passing on to the heirs. There's also another benefit in there where it's a living benefit. If a long-term care situation occurred, there's a reimbursement where you can, if you qualify, those health situations occur, you have access to funds there too at no additional cost.
Yeah, one of the things that Trish and I did was we basically said to ourselves, hey, with this Care for Life benefit, we no longer need to be sinking money down the rat hole of the long-term care insurance that we got talked in 2 years ago. And nobody's going to be exactly the same in that thought process.
Sure.
But that's what we chose to do. And that freed up funds to make things much more palatable in our personal banks.
Right.
And I mentioned personal banks. We each have one, and then we have family members who have taken a policy out on me because of the way that this insurance concept worked. Maybe that's a future topic.
Well, no, I get asked that question a lot, Greg, actually, so I'm glad you brought it up. I'll get folks that will reach out to me. This sounds interesting. I understand the cash bucket. I'm going to grow cash in that, have access to it, tax favored, all that good stuff. There's a death benefit component, I understand, which, there's some benefits there, but because of age and health or other situations, may not be able to qualify for that insurance aspect.
Exactly.
So what you're saying is, and I've shared this with many people, is you can, if that's your situation, you could fund it. You're still the owner. You control the money. You get all the benefits. Someone else is the insured, right?
That's exactly what we did.
And in case you're talking about, you were the insured for another family member.
Right. I'm the healthy guy and he's not.
There you go. I like that. Actually, I've done that with my mom, by the way. I'm the insured on her personal bank because of age and health issues.
Right.
So it's not an uncommon thing. And so one of the things I share with people all the time is, look, don't let that stop you or hold you back if you think you may not qualify. Mm-hmm. You could still take advantage of the benefits that the personal bank offers, right?
Yeah, that makes sense.
Well, awesome. Like I said, we're really glad that Greg is able to join us. He's located in Seattle. And if somebody was to contact us in the Seattle area and would want to talk to you or meet with you, I'm sure you'd be happy to talk to them.
Yeah, I work in the Pacific Northwest. I'm the Washington representative, I guess you should say.
There you go. And last thought is any thoughts on maybe a client or somebody you've helped that's kind of a fun little story you could share?
Well, I've got a couple of clients that are just starting out in life, just real young folks that are just working basic jobs. One of them has a small business. The other one works for a contractor. And they don't have a whole lot of money. Their car payment is a big important thing to them. And so we just went down the road of starting out young, starting out with the personal bank. And they each have their own individual personal banks, monthly payments, and it works out great. But it's starting out small.
Awesome. So it works for young, in between, not so young, pretty much anyone, right?
That's true.
Contact us at yourpersonalbank.com for more information. Tune in every Tuesday at noon to the Your Personal Bank Show. And Greg, again, thank you for joining us.
Appreciate the invite.
For more information on Your Personal Bank, call Ference at 866-515-6280 or online at yourpersonalbank.com. Back to Your Personal Bank Show with President and Founder of Secure Estate Management, Ference Toth.
Welcome back to the Your Personal Bank Show. Hey, and I just want to put a big thank you out to Greg Williams for sharing his story and his experience with the personal bank concept that he's used himself for his family, his business as a real estate investor and all that. And, of course, the experiences that he's shared with his clients now. So if you hadn't heard about this before or hadn't listened on the previously recorded shows, you can go to yourpersonalbank.com, of course. You can download the app, Your Personal Bank. Of course, follow us on Facebook and LinkedIn. What is Your Personal Bank? How does it work? Well, it's actually really quite simple. I got to share one thought with you before sharing with you how it works. And I've got to teach you one key concept. And that concept is this. You need to learn how to think like a banker versus an investor. Now, I want to explain in a minute what I mean by that. But just so you know, I've been in the financial industry. If you haven't heard, listened before, 22 years. I'm actually the chairman of board of a bank in formation, FDIC insured bank. We're submitting the application as we speak. Pretty excited about it. Hopefully, we'll have that open within the year. So I've got some experience understanding how a banker operates and how banks think. Chair of the board of one that's going to be opening hopefully soon. Thinking like a banker versus an investor, there is a difference. See, most of us are taught, frankly, to think like investors, okay? And that's how most people I run into and most of us operate. And what does an investor do? Well, typically, an investor takes hard-earned dollars that they trade, for assets with the expectation that the asset will increase in value, okay? And we've heard it all before. If you talk to somebody who's excited about an investment they've had, it doesn't matter what the investment is. It could be the market, real estate, cryptocurrency, you name it. The result, what they talk about is invariably they're excited about how much they made or what percentage return they got, right? That's what we always hear. We always hear about the rate of return. We very seldom hear about anything else. In fact, most investments don't create little or no cash flow, and very very seldom do I see a situation where somebody says to me when they're looking at an investment, they come to me and they'll say, "Hey, I got this great investment I was looking at. What do you think?" And a lot of the times I'll ask one simple question, and I'll ask, "Well, what's your plan B?" In other words, what's the recourse? What's the plan if things don't go well? And the response I get invariably is, well, that's not a good answer. Okay, because things go wrong sometimes. Stuff happens. So, and I always say, look, if you purchase a stock, real estate, or a business, can you tell me what it's going to be worth in a year? And, of course, we don't know, do we? We can guesstimate, we can look at charts, but we don't really know. So this is not me. This is, in many places, many sources, investing primarily for appreciation is just another form of gambling. And, they got a point. If the only way you can make money is for that account to go up or that investment or that asset to go up in value, what's the difference? Than going to Vegas, right? Because if it goes down, you lose, right? And again, return can be uncertain. There's little or no cash flow in most cases. And if it goes down, you lose. So how does a banker operate? Well, I always say, look, most of us in our lifetime at some point or another have taken a mortgage or a car loan, right? Now, when we signed the papers, we knew we would have payments, right? I always ask, did you plan to make the payments? And the answer is, of course. You wouldn't be signing the papers otherwise. And, you went through a whole approval process to get the loan in the first place, right? So the banker, what's the likelihood of you making those payments? It's pretty darn high, isn't it? And guess what? The banker or the lender knows that too because, again, you went through that approval process. And in the off chance you had not made those payments, what would have happened to that asset, that car, or that house? Well, they would have taken it, right? They would have taken it, sold it to somebody else to create payments from that person. Now, when you think about that a minute, you got to think, is the lender or the banker really risking their money? They've created a secure cash flow, your payments, and they protected their downside collateral, the asset, the car or the house, right? In fact, the statistics show, like I said, in the banking industry, we see these numbers. Collateralized loans almost never lose money for the lender. Because again, if the lender doesn't receive the payments, they take the asset. Now, sometimes they may have to hold the asset for a while. That happens. A big example extreme example was 08, 09. The real estate market crashed, of course, in a lot of places around the country. And so, as we know, particularly in places here like Phoenix, that, we had neighborhoods where there was bank-held properties held, and, a lot of them down the street. Like the street I lived on. I live in Cave Creek, a nice part of town, and there were easily half a dozen or more properties on our street that were empty for a number of years because they were bank-held. They were owned by the bank. They had foreclosed on the previous owners, and they just held them because the property values had dropped so much, and the bank couldn't resell them to make a profit, so they just held on to them for a while and waited for the market to recover. Now, of course, they got bailout money and stuff from the federal government and all that, but besides that point, bottom line is the bank held the asset for a while. A lot of banks did that, held them for a while until the market recovered, and then, of course, they resold it, got a mortgage from them, and, of course, now they're getting paid, right? So my point is, when you're doing a collateralized loan, it's rare that the lender loses money. So are they really risking their money? And the answer is, in most cases, no. So what's the criteria for a good investment as a banker? Well, secure positive cash flow and downside protection, typically in the form of collateral. And, can you go to a lender, a bank, whatever, say, hey, I got this great investment. It's going to make 20, 30% return a year or whatever the number is, and I need to borrow some money to make this happen. And one of the first questions they're going to ask? What's the collateral? And if there isn't, are they going to lend you the money? And the answer in most cases is going to be no, right? Doesn't matter the rate of return. Again, I'm not saying rate of return is not important. It is. But is it the most important thing of an investment? And the answer in most cases, I find, is no. In fact, it's one of the important aspects. But, I think it's Roy Rogers who said it best. He said, I'm more concerned about the return of my money than the return on my money. That's a very powerful concept to understand. What is the risk of losing those dollars, or part, if not all of those dollars? That hurts, right? So that's a big consideration and clearly important aspect, okay? Another one I'll give you real quick is, what's the tax implications on that investment? Do taxes make a major impact on investments? Yes, in many cases. So you got to understand the tax implications. Rate of return is one of those key things. But again, risk, potential of getting your money back in the first place, powerfully important. Tax implications, also important. All right, let's talk about a personal bank. What is it? How does it work, I should say? Well, it's really quite simple. When we get a check, what's the first thing we all do with it? Well, we put it in the bank. We deposit the money in the bank. Most of us direct deposit these days, don't we? We don't ever even see it. And what does the bank do with our deposits? Well, they loan it out. Compound interest, houses, cars, credit cards, you name it, right? So if you're going to operate or think like a banker, you want to operate like a banker. And how do banks really operate? Well, it's really quite simple. Let's say you walked in the door and you wanted to open an account. So you gave the bank some money. Then the next person walks in the door, and let's say they get a car loan, they got approved. Does the banker or lender take the money you just gave them and turn around and give them to the car loan person? I ask this question all the time, and individually and in groups and workshops and stuff I do. And invariably, more often than not, I get the answer is yes. And the reality is, the answer is no. And this is important to understand. If you understand how banks operate, look, we can agree, we can like banks or hate them. It doesn't really matter, but we can agree that they're savvy about money. We can learn from them. See, what they do is the banker takes the cash you just gave them, and they stick in their safe. And then they borrow against the funds they have in the safe, the cash, to create interest, to create cash flow, right? Now, is cash an asset? Of course it is. Can we borrow against an asset? Of course we can. We do it all the time with houses, cars, 401ks, and various other things. So do what the banks do. Basically, for the most part, banks don't invest in the stock market. In fact, FDIC, and there's lots of rules on that, limits or eliminates their ability to do those things, nor do they really want to. In fact, what they do is they earn compound interest on their deposits. That's their primary source of income by far. And they borrow against the cash they hold to earn more interest, and so can we. In the next segment, I'm going to talk about how you can create an asset and earn money from that and those funds, even if you use them for other purposes. Stay tuned.
For more information on your personal bank, call Ference at 866-515-6280 or online at yourpersonalbank.com. Back to Your Personal Bank Show with President and Founder of Secure Estate Management, Ference Toth.
Welcome back to Your Personal Bank Show, and I'll tell you what, we're talking about, we had a great interview earlier, and really appreciate that, and just talking about Your Personal Bank and what it is, how it works. And one of the things I always like to share with people is, you know, a lot of times when we talk to folks, they say, hey, they contact us for more information, which you can do at yourpersonalbank.com. You know, they're surprised sometimes when we talk to them about other financial tools. Do we do other things? The answer is yes, we do. We do lots of different things. And the thing, though, is I focus on the show on the Your Personal Bank concept because what I find is, for the most part, the majority of people I talk to have little or no understanding or knowledge about this concept or this tool. Now, is this tool for everyone? No. But what I find in most cases, most people haven't ever even looked at it or considered it. Should you consider it as a part of your financial plan, a tool? And certainly you should at least look into it and see if it's a good fit. And if it is a good fit, of course, we're going to share with you the information why it can make sense for you. But sometimes this isn't the best fit for you, and we'll talk to you about other tools and financial ideas and concepts that might make more sense for you. In other words, what I mean is when we talk to folks, when we sit down and actually, get into their situation and find out what your goals are, and one thing I want you to really understand is we're really big about listening because, we've seen the articles over the years. I've been doing this 22 years in the financial industry, that is. And, invariably, consistently, study after study comes out, and the number one complaint folks have about their financial advisor is they just don't feel like they're really listening. And that's one of the things we really try to do is really listen to you and your situation and find a good fit for you that fits your goals. Again, that's different for everybody. So is a personal bank part of that plan? I don't know yet. Should you consider it? Absolutely. Should you look into it and see if it is? Absolutely. And if you haven't, I strongly encourage you to do so. If you've looked at it a few years ago and the numbers didn't seem to make sense, I'd recommend looking at it again because products improved, the numbers are better in many cases. We've got there's a lot of improvements and enhancements that weren't available even a few years ago that are really exciting and can make it a great fit for you today. But, look at it. That's all I'm saying is check it out and consider it because, again, I find the vast majority of the people I talk to, I'm talking over 90%, well over 90%, have never even looked at this, okay? That's personal experience, okay? Dealing with hundreds and hundreds of folks over the last 7+ years that I've been sharing the personal bank concept. I wasn't familiar with it myself initially, and I was a financial advisor and doing one of the top annuity producers in the country and dealt with a lot of IRAs and 401ks and disability income and all these different things out there, doing workshops and all that, and didn't know about this, hadn't really even heard of it myself personally, okay? So it's certainly something to look at. That's what I'm saying. Again, is it going to fit everyone? No. Is something else that may be out there better fit? Certainly, and we can bring that to your attention. But again, the focus of this show is the personal bank, so that because there's so little information and knowledge about it, that's why the focus is there, okay? And I want you to at least look at it, okay, if that's fair. Now, how does it work? We're creating access to capital day one. That's powerfully important. We're going to earn interest on the asset and the borrowed funds. I'm going to touch on that a little further because that's where the real power comes in. You got positive arbitrage potential, and in fact, the money can pass on income tax free to your heirs, again, if it's structured right. Now, again, the financial tool we use, by the way, we could use any financial tool to apply the concept to it, the personal bank concept. But there's one that really works better than any other, and it's through a process of elimination, and that's insurance. It's a very specific type. But again, the process of elimination is this: compound interest. We want our money growing basically every year, right? And increasing cash flow. That takes a lot of things off the table. Anything up and down in value, of course, is now knocked off the table. We don't want any risk of loss. Do you want to borrow against an asset that could potentially lose money? That's a recipe for disaster. So again, anything market related is now off the table. We want access to the funds. CDs and some annuities certainly have safety built in, but they don't have anywhere near the kind of liquidity where we can have access to half or more of our money. Most of our cases we deal with, 60-80% of the money is available day one, okay? We want, again, I mentioned income tax-free growth and income tax-free to the heirs if it's set up properly, and the positive arbitrage potential, which I'll touch on also. Now, my biggest challenge when I talk to people about this is, and it's becoming less and less so I'm glad it's refreshing, is when I say, hey, you use insurance as a tool, some people still view insurance as strictly an expense. I got the home and the auto, and the last thing I need is another bill, and stop listening to miss the whole point. And that's not what we're here to talk about. What we're talking about is a type called high cash value. Now, there's different types built into with that, just so you know. There's fixed options, there's index options, there's a leveraged option. I'm not going to go into the details of that right now because time constraints. I've talked about it in some of the previous shows, yourpersonalbank.com or the Your Personal Bank app, or you can contact us. We can happily go into more information on which of those could be the best fit. But again, the fixed is your consistent, steady Eddie. Your index is the returns are based on an index, typically the S&P 500. You can get double-digit growth in good market years, no losses in the bad years. Those are good things. Okay, so there's some nice options there, and there's a leverage option that's used typically most commonly as like an executive bonus tool where you have a traditional, you partner with a lender and they're contributing contributions along with you, and the combination of the contributions build it up faster. Okay, we can go into more detail about how that works if that's a good fit for you. But the thing is this, I ask people all the time, when I sit down with them individually or doing a workshop, I'll say, hey, do you have any life insurance? And, half to two-thirds of the time the answer is yes. And like if it's in a group situation, they'll raise their hands and I'll say, no, you don't. And some people look at me kind of funny. And I said, in most cases, what you have is a death benefit protection tool. In other words, you're paying a premium to an insurance company, and if something happens, they send your heirs a check, right? Like, well, yeah. And some have cash, maybe a little bit of cash, but they're not really designed primarily as a cash tool. They're designed as a death benefit protection tool. And a lot of financial experts will review policies that are really strictly designed to be more of a death benefit protection tool and say that life insurance is a bad investment. Well, it is, but that's not the purpose. If you think of a teeter-totter, and this is the one visual I got to share with you. I know it's radio, but if you think of a teeter-totter, how majority of policies are structured is little or no cash. Term has no cash. It's designed to maximize death benefit. The funds being put into this are overwhelmingly focused on maximizing death benefit. And so it's a death benefit protection tool, yet it's still called life insurance. Why? Well, it sounds nicer, right? But if it's on your life, will you ever see it? No. Your heirs will, but you see what I'm saying. We do the opposite. Again, think of the teeter-totter, maximize the cash value based on the Modified Endowment Contract, or MEC rules. It's a tax rule. It's been around since the 80s. And we're minimizing the death benefit up to what the rules limit. There's significant amount of flexibility in that, just so you know, in that teeter-totter. So we can really push a lot more cash into one of these accounts than most people realize. Now, here's the thing. If you own a life insurance policy, does it have a value? Well, to your heirs, certainly, right? That's real money. But what an insurance contract really is it's a guaranteed cash contract. You've entered into a contract with an insurance company. Said, look, if I pay you some money, my heirs are going to get a check. Well, can you borrow against a cash contract? Depending on how it's structured, in a lot of cases, the answer is no. But if you structure it correctly to maximize cash growth, the answer is yes. And you have the right writers. Again, and we don't have time to go into all the different writers and stuff, but these are writers that can maximize cash value, okay? So the bottom line is this. You have access to funds. You grow cash. We're maximizing the cash growth. We're minimizing the death benefit up to the MEC rules. The money can grow in your account. You have access to those funds. You can use those monies for any purposes, paying off debt. We talk about this a lot. Buying things or investing in things. And the key is you get credited interest on the cash that's in the account. And if you choose the right option in accessing it, you can also earn positive arbitrage. In other words, you're going to get credited on the gross cash, the money that's there. And even though you've taken some out, guess what? You can still earn interest on that. There's an interest charge, but the interest charge is less than what you're earning in most cases, which means you're still earning a positive arbitrage. You're making money on borrowed funds that you've used elsewhere. This is powerful. And you really should contact us to look into this. Like I said, it's not for everyone, but you certainly should look at us. Contact us at yourpersonalbank.com and tune in every Tuesday at noon to the Your Personal Bank Show on Money Radio.
Listen next week at noon for more information on Your Personal Bank. Contact Ference at 866-515-6280 or online at yourpersonalbank.com.
This show is designed to provide accurate and authoritative information. The presenter and guests on this program do not engage in rendering legal, accounting, or tax advice. Expert advice from a professional involving your specific situation should be sought, if required. Permanent life insurance is a long-term investment. Products, optional features, and riders may have limitations, restrictions, and additional charges and may not be available in all states. Withdrawals beyond principal may be taxable income. Excessive and unpaid loans may cause the policy to lapse. If a policy lapses, unpaid loans are treated as distributions for tax purposes. Replacements may not be suitable for everyone. There may be penalties and surrender charges when replacing coverage. New products may include new surrender charges and contestability period. Policy guarantees are based upon the claims-paying ability of issuing insurance company and do not apply to the investment performance or assets in the underlying variable portfolios. The life insurance and annuity products in this presentation are not FDIC insured, may lose value, and are not bank guaranteed.